Sensex and Nifty ended record closing highs after a volatile session. Mid-cap index ends above 50,000 mark for the first time.
Government incorporated bad bank submits a binding offer to acquire Jaiprakash Associates debts from lender for 10,000 crore rupees. Shares of UPL also rally after CNBC TV18 report that the company plans to launch an IPO for its seeds business.
HDFC Bank turns in a stronger than expected growth in deposits in the fourth quarter, powering the stock higher even as other lenders like RBL Bank, AU Small Finance Bank also turn in a good show. Hello and welcome to a fresh new edition of Markets Forward. It's a Thursday afternoon and this is your go-to show where we aim to get you everything you need to know as you prepare for the next trading session. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi Prashant. Let's get started then. We've got you covered for the next 20 minutes with all the big news, the key developments in Dalal Street, top corporate voices, the events to track ahead. But first, the day's market action. Big swing, right? 22,300 on the way down to 22,600 on the way up.
200 points, right? From
300.
300 was the low. Yeah, 300 almost 300 points.
Yeah.
Absolutely. And the low came, after a very strong start, by the way. The low was made at about 11, just before 11 o'clock in the morning. And then from there, this is the bounce that really came through. So buy the dip. And by the way, this has been true for the last 3 days. Intraday dips have all been bought. They've been small. This was, of course, a little larger. But last 2 days, we had flat closes after big swings from the lows. Today, it was not a flat close. It was a 0.5% higher close. So that's good to see. We hit a new record high as well on the index in terms of trade. Of course, closing a little bit off the high point of the day. Now, the Bank Nifty, that also ended stronger. HDFC Bank, of course, a big case in point. We'll talk more about that name with Abhishek in just a bit. So deposit growth, there is also expectation that some passive money will come in via the MSCI route. But that's an expectation for now. But markets were happy with what they've reported as far as the business update is concerned. Mid-caps and small-caps, mid-caps were flat. Came off the day's high. The small cap index doing a little better. Advanced decline positive. And if you had to pick sectors, it was private banks, but there was IT services as well, which participated on the upside. And we'll discuss that as well as we go along. Look at that market breadth crisscrossing through the swung from the high to the low and then recovered again and finally ending in the positive. Rima.
Well, private sector banks and particularly HDFC Bank, the Nifty ends up with a gain of about 80 points. And out of that, the HDFC Bank's contribution is 76 points. So a bulk, in fact, entirely, the Nifty gain is courtesy HDFC Bank. But the other pocket of strength was IT. The Nifty IT index ending with a gain of about 1%. And you had names like Tech Mahindra, TCS, LTI Mindtree, all of them rallying pretty hard. And I think one statement from JP Morgan in their IT preview perhaps did the trick. They believe that NSE IT's negative price action over the last month could keep the downsides limited on the Indian IT sector, and that maybe provided the fuel to the up move today. But we'll talk more about individual stocks. Here is a lineup of what we have for you in store today. We start with the top movers and shakers of the day. Hormus joins in. The two stocks that took the spotlight today are JP Associates and UPL, while a plethora of bank stocks like HDFC Bank, AU Small Finance Bank, Suryoday SFB were also in focus on the back of their healthy Q4 business updates. And CNBC TV18's popular segment, D-Street Chatter, on the show, where Nimesh will join in to tell us all the buzzing stocks of the day. And last but not the least, to delve into the key market events, we will get you an update on that too. But let's get to Hormus now for the top movers and shakers of the day. Hormus.
You highlighted HDFC Bank, but we can't not talk about it as the stock of the day, possibly. And what a day we had, right? Going up to 22,600, then turning negative, then clawing back the losses as well. And all thanks to HDFC Bank, 3% higher, 1,527 on the stock. First time a close above 1,500 after the 17th of January this year. So that contributed to the gains on the Nifty. Staying with financials, a lot of small finance banks came out with their business updates. this morning and through the day, and the reactions were there to see. AU Small Finance Bank went higher but gave up the gains. Ujjivan Small Finance Bank ending 6.5% higher. EASF Small Finance Bank also seeing healthy gains in today's session. But alongside the small finance banks, another sector that did very well today was specialty chemicals, particularly amines, with Alkyl Amines and Balaji Amines both gaining anywhere between 7 to 11%. Neogen Chemicals, Deepak and Chemplast Samna are also ending well in today's trading session. Aside of the small finance banks, a lot of other companies also came out with business updates today. Vedanta saw the reaction there, 4% higher. Dabur, with that poor commentary from the management, 5% lower, as was Angel One, and IEX and L&T Finance also reacting to their business updates. And lastly, midcap IT was the flavor of the day, along with private banks, and the positive brokerage note that came in from JP Morgan, where they initiated coverage on Coforge, upgraded Persistent Systems, and TCS and LTI Mindtree also saw a positive reaction today. Back to you.
All in all, a great session. Nothing really to complain about. We'll take it forward, almost from there, with Sudip Bandyopadhyay of Inditrade Capital and Shilpa Rout of Prabhudas Lilladher. Thanks both of you. Just a quick view first on the nifty trajectory. Shilpa, we've spoken in the past, and do you still believe that on the upside it perhaps will be a little limited? We still will remain ranged, maybe 100, 150 points more, and then you swing back and remain in a 500-600 point band on the index, or this could extend significantly and meaningfully on the upside?
I believe, this range towards 22,000 to 23,300 is where we will see the index hitting, and then only after that, we can talk about some meaningful, correction or sideways market, whatever term we may use. But the kind of, in the past one series that we saw, the consolidation for Nifty in between 21,500 to 22,200, it has taken quite some time now. And from here, the rally again resuming with so much of strength, I believe 22,800 will be taken out, and above that, we will surely test 23,000 to 22,300 zones.
23,000 to 23,300. What about HDFC Bank?
Yes, HDFC Bank is the one that we need to focus on now, and that could contribute due to this. To this rally for now. HDFC Bank, I believe, can do 1,600 to 1,640 as long as we are holding 1,500 and above. The rally today that we saw and the levels of 1,520 plus today is very, very crucial for this, bank and for this trip to hold on to this level and then move towards 1,580, 1,600, 1,640. But slowly for sure, but we will see those levels coming.
Okay, let's start then with the CNBC TV 18 exclusive. The National Asset Reconstruction Company has submitted a binding offer to acquire Jaiprakash Associates debt from lenders worth 10,000 crore rupees. Sources have told CNBC TV 18 that the lenders are currently evaluating the offer and there will be counter bids. Jaiprakash Associates gained 4.5% in trade. Ritu joins in with the details. Ritu.
Well, the resolution of Jaiprakash Associates' debt has been an ongoing affair for the past 6 years or so, and now it seems there's some movement as far as the resolution is concerned. We've been given to understand that as of this week, the banks who've lent money to Jaiprakash Associates have received a binding offer from the National Asset Reconstruction Company, or the NARCL, to acquire the debt from them. And we've been given to understand that NARCL has made an offer of 10,000 crore rupees approximately to acquire this debt from banks. Of course, the deal will be structured in a way where partly it will be cash, a smaller portion, and the larger portion that it would have offered would have been security receipts. But this is a binding offer that has come in now. The lenders are evaluating it. If accepted, there will be a Swiss challenge mechanism that bankers would have to go through, where they will invite counter bids from other parties, keeping this 10,000 crore offer as the base. If no other bids are received, then of course this is the offer that will be on the table. But keep in mind, given that Reserve Bank of India back in 2017 had directed banks to resolve this company under the National Company Law Tribunal through the IBC, the lenders would require the Reserve Bank of India's approval to go ahead with that process. Now that said, keep in mind there's nearly 29,000 crores of debt, that is in question here. Of course, over the years, banks have provided for it. So anything that comes in, in terms of resolution will be recovery that they make on top of that. IDBI Bank, State Bank of India, ICICI Bank, these are some of the large lenders that have exposure to Jaiprakash Associates.
Thank you very much for that. Moving on to UPL. That was also one of the big movers. Sources tell CNBC TV18 the company is likely to launch an IPO of its seeds business, Advanta Enterprises, and this could happen as early FY25. Vivek joins in with these exclusive details. Vivek.
Well, that's right. So UPL is the stock in focus. So the company, which had earlier gone ahead and done a complete restructuring of its various businesses, various segments, has one particular vertical known as Advanta Enterprises, which houses both, the domestic as well as the international seeds business. We understand from our sources that the company is trying to launch an IPO in early FY25 itself for this particular business, Advanta Enterprises, and we understand that they have already gone ahead and appointed the bankers for the same. So both our securities, Morgan Stanley and JM Financial, are expected to manage this particular issue. We understand that UPL would be divesting close to 10 to 12% of the total business via the IPO, and the valuation being targeted by the company is close to $4 billion. We'll also discuss about how this particular valuation actually came about. Now, just for the benefit of our viewers, what is the shareholding structure as far as Advanta is concerned? Remember, KKR acquired 13.3% in Advanta for close to $300 million in September 2023. So 13.3% held by KKR, and the remainder is currently being held by UPL, which they plan to divest. What will UPL use the proceeds of this particular issue for? Remember, UPL has significant debt on its books. The company had a net debt of close to $3.77 billion at the end of December 2023. And the company had also planned a rights issue in order to pay down its debt that was close to $500 million. That particular rights issue has been delayed a little bit. Now, along with that, the company had said that they expect to reduce net debt by the end of FY24 to $2.5 billion, which also appears that will be delayed. So this particular IPO becomes quite significant for UPL to go ahead and reduce its debt. Now, talking about the valuation at which KKR had put in the money was close to $300 million. That was close to $2.25 billion. Now, analysts anticipate that comparing it to global peers at FY26, EBITDA levels, they can expect a valuation of close to $4 billion, which is what the bankers are targeting. It will be interesting to see, number one, when the IPO does come in and at what valuations does it come in.
Right, Vivek, thank you very much for that. So two CNBC TV18 exclusives today. In a way, two stressed companies, maybe some repair happening in both situations, Jaiprakash Associates and, of course, UPL. Vivek, thanks very much for that. Sudip, any thoughts? UPL specifically?
Well, I think what they had done is fantastic. They are amongst the global players in this particular agrochemical space. Probably they are number 5 in the world. Through acquisitions, they have grown. But the challenge is that along with that came a large debt burden. And in a downturn, which started kicking in last year, actually beginning of last year, I think the debt was becoming more and more painful. Under these circumstances, reducing the debt was a big part of their agenda, and the market wanted that as well. So with this seed company separate listing, I think to an extent that can be achieved, and I think that's a good thing for UPL shareholders' point of view. I would say that fundamentally also the business at current level, the current level of valuation does look interesting. And we are also hoping for an upswing in the business cycle as far as chemicals and agrochemicals are concerned. Under these circumstances, UPL can anyway be looked at for acquisition for 1 year plus hold at current levels.
Okay. Let's move on then to talk about banks. Many of them posted their Q4 business update. HDFC Bank, of course, was the big winner on the back of its strong deposit growth. AU Small Finance Bank soared again on the back of strong deposit and advances. And Suryoday Small Finance Bank was one of the stars, their 11% gain over there. Abhishek joins in with the finer details. Abhishek.
Well, Rima, as you mentioned, deposit has been the key highlight or the focus of investors for the results that have come in from the updates that have come in actually from the lenders. So HDFC Bank, that deposit growth in absolute value has been rupees 1.66 lakh crore on a sequential basis, which is 4 times the sequential growth that they saw in Q3 and more than, Q4 FY23's incremental growth as well when the times were good. Despite despite the tight liquidity scenario, a 7.5% growth on deposits has been well rewarded by the street. CASA also grew by 8.8% quarter-on-quarter, and CASA ratio for HDFC Bank improved on a sequential basis. Advances growth was tepid at about 1.6% sequentially. The domestic retail advances grew by 3.7%. Commercial and rural banking grew by 4.2%, but the drag came in from the other wholesale advances, which actually declined by 2.2% on a sequential basis. Their credit deposit ratio also declined to 105.4 versus 111.5 in the previous quarter. AU Small Finance Bank, that also saw robust business momentum. Deposits up 8.8% quarter-on-quarter. CASA, the low-cost deposit, that grew by more than 10% sequentially. However, CASA ratio declined on a sequential basis by about 90 basis points. AUM growth was pretty robust at 28% plus YOY and about close to 8% sequentially. The cost of funds inched up a bit by about 8 basis points on a sequential basis. Suryoday Small Finance Bank, again, robust business momentum over there. Deposits grew by nearly 20% quarter-on-quarter. The CASA also jumped up by 31% sequentially. So the CASA ratio actually improved on a sequential basis to 20.1 versus 18.5% in the previous quarter. Disbursements growth was strong at 30.6% sequentially, which helped the AUM growth at more than 13% quarter-on-quarter. Their asset quality also improved. Gross NPA ratio was down 10 basis points on a sequential basis. Back to you.
All right, well, business updates and lots of them, right? So let's get talking about the FMCG and retail space, Dabur and Avenue Supermarts. So Mangalam has got details on both these. Mangalam, diversion kind of performance here.
Diversion for both Dabur and D-Mart. It was a tale of two cities. So we start with a good one coming in from D-Mart. The revenues of the company grew by about 20%, and that's higher than the 4-year average as well. So that's telling you there was some pickup. More importantly, the number of stores that were added over the last 1 year were close to about 12.6% higher. And in that, if the revenues have grown 20%, that implies higher same-store sales growth as well. And this is a metric that the street typically likes because it does speak about operating efficiencies of a store itself. And they've also added 24 stores in the quarter, which is a big pickup. Typically, the fourth quarter sees higher number of stores being added, but 24 was higher than analyst estimates as well. And as a result of which, the stock was higher. Now, moving on to Dabur, which was a stock which was lower by about 5%. There was no respite when it came to consumer sentiment and business momentum picking up, because the company did say that demand trends remain sluggish. Add to that, the revenues were in mid-single digit, and the revenues were impacted by three reasons. The first one was the Badshah acquisition, which was there, was in the base, so you didn't get that additional kicker from that. Secondly, the healthcare business did not do too well because of delayed winter. And thirdly, food and beverages did not do well because of a high base. What did well for them was the home and personal care vertical, but that accounted, for just enough growth for the company to do mid-single digit sort of overall revenue growth. And the margins did expand. The street definitely wants some improvement in overall revenues and margins, which is why the stock was lower by 5%.
Okay, so they particularly on Avenue Supermart, in the last 1 month, the stock has gained close to about 20%. Considering the long period of underperformance, do you think Avenue Supermarts has upside?
Well, I'm cautious, Rima, on Avenue Supermarts. I think there is competition is intense, not only from Reliance Retail, but from the online players like Zepto, Blinkit, and Instacart, and all that. The entire model is, I think, moving. And apart from brick and mortar retail, the online retail is becoming big as far as grocery delivery also is concerned. I think we have to see how D-Mart's online platform, they already have that and introduced that, is performing, how they're competing with these quick delivery guys. And of course, the numbers as far as how much is FMCG, how much is non-FMCG, because non-FMCG is higher margin. We have to see that that kind of a breakup to come from them before we can comment. But as far as my view is concerned, I would prefer to be at a distance from this stock at this point in time. It's at a valuation which is not cheap, and there are too many moving parts in this entire business as things stand today.
All right, Sudip and Shilpa, appreciate both of you joining us and giving us that perspective and your thoughts on the market. 100 points higher, by the way, is where we ended. And it's looking, overall good as far as the markets are concerned. We'll take a quick commercial break here. We'll come back with a popular D-Street segment. Nimesh is going to tell us what's on his radar, the stocks that are on his radar. And of course, events to watch when we come back tomorrow. Stay with us.
Welcome back to Markets Forward. Let's take note of all the big corporate voices of the day. So BEML gained close to about 2%. The CMD, Shantanu Roy, said that he anticipates a steady revenue growth of 20% over the next 3 to 4 years. Speaking of margins, he said it will improve to 14%, which compares with about 9.5% that the company clocked in last year. So 14% margins is only if the sales growth shows momentum. KEC International soared 7% after it bagged orders worth 806 crores. The managing director, CEO Vimal Kejriwal, said majority of these orders are in the civil segment. They're guiding for a 15% revenue growth with margins around 7.5% to 8% next year.
Zaggle Prepaid Ocean Services, a very large outperformer over the last 6 months or so, was also on our radar. We had the management with us today, and they told us that they expect 45% growth in FY25. This is in line with the 40 to 50% growth guidance they put out earlier as well. Speaking about their agreement with Visa, the management said that the deal has worked out great for them. The company will now also work with other network providers like RuPay. Lastly, the company is targeting EBITDA margins in the range of between 11 to 13%.
It's time now for a segment, D-Street Chatter. Nimesh joins in. Nimesh.
Well, it was a good recovery for the markets, largely led by large caps, and within large caps, it was the financials which did well. So the Nifty Bank ended almost 1% higher. In terms of individual names, though, the first stock was Protein eGovern. That's been buzzing off late, up 4% in today's market as well. I understand the HNI interest is back in this particular stock, but expect a very large block deal as well in eGovern very soon. So that's the first name. The second name is Excite. That's been buzzing for the last few days on very strong buy flows at HNI. So that's the reason why that is come to my list. The third name is Pfizer. Within the MNC pharma name, this is one stock which has been consolidating of late, but I understand one of the domestic PMS is an active buyer of late in Pfizer. And the last name is Aavas Financiers. There were multiple block deals in today's market, and I understand a leading long-only fund was a seller, so the disclosures could be quite interesting in Aavas Financiers today.
All right, interesting list as always. Nimesh, thanks very much for that. But before we wrap, let's get you a quick list of the events to watch out for tomorrow. Sonal has got that one. Sonal.
Thank you so much for that. Of course, the big event tomorrow is the RBI policy meet outcome. This is something that we'll expect at 10 a.m. tomorrow, so watch out for that one. Additionally, RBI's new rule on exchange-traded rupee derivatives will kick in from April 5th. There's been a lot of debate around that, so watch out for that one as well. Indiabulls Real Estate will be in focus in stock-specific news. They do have a board meet tomorrow for fundraise. The stock has been doing well, up 17% this month itself, so watch out for that one. We have some dividend ex-dates coming in. One is for ISAB India and 3i Infotech. That one has an investor day. Now, in terms of global markets, China and Taiwan, they will continue to remain shut tomorrow as well. So no rates coming in from there. And economic data in the European Union, retail sales month-on-month basis for the month of Feb will be out tomorrow. And for the US markets, non-farm payrolls for the month of March, that is something we'll be tracking.
Thank you very much for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates.